To market news now, U.S. stock index futures climbed as easing worries about a banking crisis lifted risk sentiment, while investors awaited economic data to assess the Federal Reserve's monetary policy path. In local company news, food and logistics group RCL Foods has agreed to sell its frozen logistics operator, Vector Logistics, to local investment vehicle AP Moller Capital for 1.2 million rand. The effective date of the deal is July 3rd, and it will allow Vector Logistics to expand further afield in meeting the growing demand on the continent. Meanwhile, Woolworths Group Finance Director Riza Isaacs has resigned and will leave the high-end food and clothes retailer at the end of June to pursue new interests. And the sales of Barloworld more than halved in Russia in recent times as the war in Ukraine continued, but that did not prevent the diversified industrial group from reporting higher overall revenue. To talk to us about this and the various dynamics that are playing out in the market right now, we are joined by Chantal Marks from F&B Wealth and Investment. Chantal, thank you so much for your time. I mean, given what's happening right now with what regulators have been trying to do when it comes to the banking sector, when you look at market sentiment right now, are we post peak uncertainty at this stage?
I'm not sure, which I think is probably the wrong answer and probably actually answers your question quite well at the same time. So I think that we're definitely out of the eye of the storm. If you look at the volatility index or the VIX currently, it's moved back towards levels below 20. That is a sign that volatility, at least, and fear in the market has subsided a little bit. Even if you look at the fear and greed index, you can see that the market has moved away from extreme fear to just kind of fear levels. But we're still in a precarious position, because even though the mini banking crisis that we experienced seems to be somewhat behind us, it can very much still reoccur. There's still a lot of jitters around that. And then, of course, there's still a lot of other stuff that we're dealing with at the moment, not least of being the future path of the Fed, the lag effect of interest rate increases, what the mini banking crisis actually meant for credit conditions in the US and what that would mean for inflation going forward. So a lot of uncertainty still exists. Probably off the peak, but we can very easily go back to that peak.
Speaking of those lag effects that you've just mentioned, what are you paying attention to as a signal, perhaps, that, the other shoe might drop?
So I do think that we need to watch credit extension in the US quite closely. And also just kind of the credit situation. Generally, we have to watch the employment situation quite closely. There is a risk, because the Fed has tightened so quickly, and there is a lag effect from a tightening perspective relative to an economic growth slowdown, that they may have already done more than enough, and maybe they've done too much. So you have a situation where it could easily result in a hard landing in the US if that lag finally does come through, or that lag actually starts filtering out. Remember, the US is different to the rest of the world from an interest rate perspective, because a lot of their mortgages are actually fixed rate mortgages. So it takes a longer time for the impact of interest rate increases to filter through to consumer behavior. But once it does, it could be quite severe.
So when we look at, recession fears versus the market hopes of a rate cut, what does rate cuts, do for risk assets? Is that a good thing or a bad thing in this environment?
So rate cuts are generally good for risk assets, just because of the way that risk assets are valued. And then, of course, there's an impact, for example, in the equity space on funding costs for businesses. So generally, rate cuts are a good thing. But we've seen over the past that when there is a prospect of a recession, or recession actually takes place, equity markets specifically tend to bottom during a recession. So perhaps there could be a situation where those two things are in conflict. But certainly once you get to recessionary conditions, I think it's a good time to start increasing your exposure to risk assets. Prior to that happening, you would probably want to start within that risk asset basket to look at bonds rather than equities. But a lot still remains up in the air. I mean, we don't even know if that recession is actually going to take place, because we're still trying to figure out whether or not that lag impact that we spoke about earlier is still going to come through, or if it will come through at all.
The one thing I found interesting was Alibaba's plans to split into 6 units. What do you make of this revamping and, of course, the listing plans? And I suppose the other question is, does it instill optimism that the Beijing crackdown on the tech sector may be ending?
So I do think that this is a positive move for Alibaba shareholders. Alibaba at the moment seems to be valued kind of as an overall business, but with most of the value, probably all of the value, being ascribed to the e-commerce assets. But there are a lot of other interesting business in there, including a cloud business that should trade at higher multiples than, for example, an e-commerce business. So if you split these businesses up, you could see some of the companies within Alibaba attract higher multiples and actually be valued more fairly. So it should result in a value unlock for shareholders. In terms of what this means from a Beijing tech crackdown perspective, I think that this is probably the result of that tech crackdown. They don't want these big conglomerates that are kind of market dominant, because it is quite bad for competition, and it does kind of kill that industry slightly because of that market dominance. So I think that it's just going to probably take the focus off of Alibaba, but there's still a risk that that focus could remain on some of the other massive tech companies in China.
Chantal, unfortunately, we have run out of time. I would have loved to ask you the performance looking at Premier Foods, which, of course, the Premier Group listed on March 24th, just to get a sense of what you think of that particular company. However, we have run out of time. Of course, that is Chantal Marx from FNB Wealth and Investment, and we'll unpack the investment case for Premier Foods perhaps at the end of the week. And don't forget, tomorrow we'll have the Reserve Bank interest rate announcement. We'll be unpacking that decision with 2 economists, so stay tuned for that. However, we're going to take a quick break. When we come back, we'll have more news for you.